There is no other reason why every central bank on the planet owns it and has been accumulating it and repatriating it. There is a list of, I don't know, 30 or 40 countries that have repatriated all of their gold from the New York Fed and the Bank of England. I think that it's really important to realize that this is a slow-moving changing of the guards, if you will. Gold is being remonetized across the globe, period. And I think that in the end, where you want to be. Silver is the most undervalued asset on the planet.
Gold plays a crucial role in central banks' portfolio diversification and risk mitigation strategies. Its status as a low-risk, real asset that maintains value across economic cycles makes it an attractive option for financial institutions worldwide. For example, the Reserve Bank of India allocates approximately 8% of its reserves to gold. AndySchectman, a renowned expert in precious metals, particularly gold and silver, views the increasing interest in gold as a gradual but significant shift in the global financial landscape. He describes this phenomenon as a changing of the guards, with gold being remonetized globally. While Schectman considers silver the most undervalued asset, he believes gold will play a more critical role from a monetary theory perspective. Recent developments support Schectman's observations. Zimbabwe's central bank, for instance, recently introduced a new gold-backed currency called Zimbabwe Gold to combat inflation, which reached a 7-month high of 55% in March. This move underscores the growing trend of nations turning to gold as a stabilizing force in their economies. Schectman argues that while silver offers more significant potential for price appreciation and volatility, gold's status as a Tier 1 asset globally gives it a unique position in the financial world. He predicts gold will play a significant role in future global currencies, potentially backing them at 40%. The precious metals market continues to experience volatility. Silver recently saw a 0.45% decline, trading around $29.35 to $29.30 and stalling its recovery from mid-May lows. Meanwhile, gold faced selling pressure, influenced by a healthy U.S. labor market. These fluctuations highlight that despite their growing importance in global financial strategies, precious metals remain susceptible to various economic factors and market dynamics. Join us as we delve into AndySchectman's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
As far as silver to gold, look, you know, you're going to have $1 million worth of gold in a briefcase. $1 million worth of silver is going to weigh, way over 1,000 pounds, couple thousand pounds for that matter. I think over time, I've been accumulating it for 34 years. I mean, I'm probably pretty close to, I don't know about you, by the way. I moved to Florida and I get the worst allergies this time of year. Apologize. My eyes just keep watering and watering. I've never had allergies my whole life. I think it's worked out to pretty close to 50-50. Look, silver offers much better potential and has far greater volatility. To me, gold is it's the only other Tier 1 asset in the world. And when you see the fact that the new unit currency will be 40% gold backed and redeemable, not for the public, but for the countries who use them, gold has a very significant role. And it's interesting because gold is held in all of the central bank balance sheets in something called the gold revaluation account. And you had the head of the Dutch National Bank not too long ago say, I don't worry about our balance sheet because we have gold in the revaluation account. And even though it is not considered an asset against a liability, we know it's there. In other words, they can flip that switch. My feeling is that all of these countries that are incurring massive amounts of debt know that they have gold in their revaluation account. So does China. Why would they tell us how much they have? Someone will revalue gold. Maybe it's the BRICS nations. Maybe it's China. And look, they're already, silver in Shanghai is almost $4 an ounce higher. What is the real price? What if they said it's $40 higher and silver is now $70 an ounce, and anyone who had the ability to send silver to Shanghai would do so. And now that is the real price. And so the real price is what it is being offered for globally. I think gold will be revalued. There is no reason that the BIS would have reclassified it as the world's only other Tier 1 reserve asset. There is no other reason why every central bank on the planet owns it and has been accumulating it and repatriating it. There is a list of, 30 or 40 countries that have repatriated all of their gold from the New York Fed and the Bank of England. Many of them just recently. India is an example. just 2 weeks ago, 3 weeks ago, I don't know, they bought 1.5 times the amount of gold in the first 4 months of this year than they did all of last year, and repatriated all of it, plus 100 metric tons that were being held at the Bank of England, i.e. the London Metals, LBMA. And all of these countries, including Saudi Arabia and Egypt and about 7 African countries, Algeria, South Africa, Nigeria, a bunch of others, they all just brought their gold back from the New York Fed, i.e. the COMEX. And so, yeah, I mean, I think that it's really important to realize that this is a slow-moving changing of the guards, if you will. Gold is being remonetized across the globe, period. And I think that it is, in the end, where you want to be. Silver is the most undervalued asset on the planet. But again, I still think that from a standpoint of monetary theory, it will be gold. And when I look at Bitcoin, I'm not a Bitcoin naysayer. I'm someone who has dabbled a little bit into it. My friend Mark Moss and Natalie Burnell took me out to lunch in Vancouver and opened my eyes to accumulating little bits of it. Certainly not the way that they have, but I don't want to be sitting in this position, commenting on it forever, looking at it and saying I should have done it. But, you know, I think it is one of these deals where, you know, once it got created, once ETFs were created, and of course, even before that, the COMEX contract, it lost its purity. So it's not the same thing that it once was in my mind, but it's compelling enough to me to own it.
Russia's agricultural minister Oksana Lut recently announced plans to create a BRICS grain exchange, with transactions to be settled in the national currencies of member countries. This initiative, directed by Russian President Vladimir Putin, represents another step in the bloc's efforts to decrease reliance on the US dollar in international trade. AndySchectman warns of potential severe economic consequences for the United States should there be a sudden shift away from the dollar. He predicts that such a move could trigger high inflation and interest rates, potentially destabilizing the U.S. economy. Schectman argues that the weaponization of the U.S. Treasury market against Russia, particularly in response to the invasion of Ukraine, has inadvertently incentivized countries to seek alternatives to U.S. treasuries. Gold has become an increasingly attractive option for nations looking to diversify their reserves and hedge against geopolitical risks. The West's unprecedented sanctions against Russia have accelerated the push for de-dollarization among many nations, especially those aligned with China. These countries are increasingly turning to alternative assets, with a particular emphasis on gold, to mitigate political risks and reduce their vulnerability to potential economic sanctions. Let's get back to the interview.
You know, there was a meeting that just came out of Novograd. At the same time, it was in coordination or very closely timed with the G7 meeting, that the head of the Royal Crown Prince of Saudi Arabia said, yeah, I'm not going to come. Thanks for the invite to the G7 meeting in Italy. At the same time, he sent his finance ministers to the BRICS meeting in Novograd, where 59 countries have formally expressed their desire to join the BRICS, where 80 billion in bilateral trade agreements, not using the dollar, were signed on the sidelines. And they did indeed come out and say, this is what we have decided to do. And in fact, have scheduled a special meeting in China in September to discuss the specifics of Project Enbridge and the unit, which would then, in theory, be put on the table in October for their big meeting and announce the legitimacy of it. So what does it look like? It looks like status quo until it doesn't. And it'll be one of these things where when it is announced, when all of these countries have slowly accumulated gold, when all of these countries have slowly de-dollarized and struck relationships in terms of their association with these entities, and like the Shanghai Cooperation Organization, which is growing by the day, the largest regional military organization in the world, all of these unions are being built. And then when bang, they make that switch, it's the all at once. And that's when it's a religious experience for people in this country, as all of those dollars come flooding home and interest rates spike. Can you imagine what this country looks like at 25% inflation and 25% interest rates? What would it look like? Stocks, bonds, real estate, the banking system, the insurance companies, poof, it explodes just like that. But if you do it too soon with trillions of dollars of assets and dollar-based assets within the system, it doesn't benefit these countries. So it will be slow and methodical. But I do believe if you are not a contrarian, you're damn well destined to be a victim. You have to see this for what it is. And it's happening in real time. And to see an admission like this, to see the Crown Prince turn down the G7 meeting, to see the head of the BRICS New Development Bank acknowledge a new system that will allow settlement outside the dollar, see all of these bilateral deals in terms of the transactions. These transactions are being done in other currencies. That chips away at the transactional status of the dollar. And the settlement status being the treasury market, which has been weaponized against Russia, stolen, let's call it what it is, and funding their enemy in a war effort, which is about as stupid as a mud wall in a rainstorm. This incentivizes all of these countries to choose gold over the U.S. Treasury, because not only has it doubled its performance in the last 25 years, and you can see it by divergence right now, where even as rates are going higher, gold is going higher. It's supposed to be the opposite. As rates go higher, gold would go lower. There's more countries that say, I don't care about the U.S. rates. I want the gold. I'm done with it. And so what you're seeing is a shifting of the guard, and it has to be done in this manner. And I think that's the reason so few people will get it, because the time that it takes for these countries to position properly creates an environment where people blow it off, dismiss it, poo-poo it. It's a nothing burger until it's not. But if you look at the positioning, you look at Saudi Arabia striking these deals, being a full participant in Project Enbridge and not going to the G7, and all of these things together start to paint a very frightening picture when the switch is flipped. But when 59 countries come out and say, we're going to join on top of the 10, you're talking the majority of human population, and all of the commodities and the shipping lanes and all of these things that are strategic are being fortified in a very, very methodical way.
As we witness the global shift towards gold and alternative currencies, particularly among BRICS nations and their allies, how might this changing of the guards in the financial world impact individual investors and economies in the West? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.